All right. Well, welcome to day 4 of boot camp. We've got a lot of folks joining in here, so we'll just give it a little bit to get in here and we'll get everything started. We have been talking about the client life cycle throughout our last couple of days. We've been talking about using it before the meeting with Research Center, talking about Stephanie and I on Monday. We're talking about lead generation and how you're getting folks through the door and into the door and turning them into long-term clients. Talked yesterday a little bit about onboarding your clients and how we can get them from that first yes to a long-term client, all with nitrogen kind of at the center of your process. So today we thought, well, why don't we get some real life in the flesh ish Zoom style advisors, nitrogen customers have been with us a long time. We're just at our Fearless Investing Summit just a few weeks back and got to high five. At least, John, you and I got to hang out for a little bit. Urban, I know we were kind of ships passing in the night. So wanted to go through and just talk about how you guys practically are using nitrogen in your process. And I know, John, you and I talked, we talked about you're using it every day in your process. Urban, you've been around for a hot minute too. So really appreciate you guys joining us. We might have one more join us. We'll see if we can get Tom in here as well. And until then, let's go ahead and get things started off again. My name is Chris. I'm on the coaching team, joined by my awesome, most excellent teammate, Stephanie. Stephanie, hello. How are you?
Hello, thanks, Chris. I'm doing well. Excited to be here with everybody.
Yeah, super excited. And Stephanie's going to help us out too. Not only if Stephanie, if you got any follow-up questions, please, or extra insight, let us know. But sharing the screen just in case we want to hop in and kind of show you what in the world we're talking about when it comes to nitrogen. But fellas, that's a lot of talking. A little bit of housekeeping here. I'll let folks know a couple of things here, but I'd love for folks to meet you. So, Urban, I'll start with you. You were the first one in the meeting, so that's you get the honor of jumping in there. Can you just tell us a little bit about yourself, about your firm, and how long you've been in this industry?
Thanks, Chris. Yeah, and great to be here. I've been in the industry about 25 years. The last 12, 13 or so as an advisor running my own independent practice. In that I've affiliated with a larger firm that has adopted nitrogen and fortunately and have the ability to use that tool over the course of that time frame. I want to say close to 10 years that I've been a Riskalyze now nitrogen
Oh,
user
wow.
and it was something that's key to my day. And I think through some of the discussion we'll have, some of the things that I've incorporated over time that help with those discussions with clients, particularly in volatile times. But really, just me, my solo practice, work with largely, I guess you'd call them mass affluent, southwestern U.S., maybe for geographic, purposes, but really work with clients all over the country.
Love it. Thank you, Urban. Appreciate that. Yeah, that's I'm coming
Thank you.
up on my 10-year Riska Nitroversary or whatever. So it's about as long. We've been about the same long time journey here. John, bounce it over to you.
I'm John Venhuizen. I work in Wisconsin, in a small town, and we have an own insurance agency and investment brokerage here. So I'm a broker dealer rep, but been with Nitrogen for probably close to that 10-year mark too, maybe nine years, maybe something like that. Use it all the time. And yeah, we work with, I guess, kind of across the board. We're in a small town, so we do get a lot of different clients. Mass affluent is probably the best way to say it, but definitely from people starting off in work, 401k employees, as well as more wealthy clients that are landowners, farm owners, that kind of stuff. So yeah.
Awesome. Awesome. Good to know. Well, thank you for sharing. Well, let's jump right in here. And yeah, as we saw in the chat there, just a quick reminder, hey, if you got questions, we want to hear from you. You've got your Q&A box there inside of Zoom window. Go ahead and put your questions in there for Urban and John, and would love to get your feedback and let them know what you're thinking. Any questions specifically around what we're talking about, or just around nitrogen in general. We'd love to hear from you. All right, fellas. Now, I didn't put this on our sheet. This is not a gotcha question at all. It's just kind of a fun one to start. So when it comes to client meetings, is it typically review meeting or therapy session, or does it just depend?
I'm going to say a little bit of both.
Okay.
Yeah, definitely. I think a little bit of both. I mean, especially when you're talking about the geographical or the geopolitical events that are happening right now. There's a
Yeah.
bit of reminding people what they can control and what they can't, for sure.
Yeah.
Absolutely. And sometimes John, I'm guessing you feel the same way. Sometimes it's just sit back and listen
Yep,
and
for sure.
not try to solve everything, but just let them voice what concerns them, and that's become a skill that I've really worked on over the last several years, to say the least.
Yeah, me too, but I'm not very good at it. I still talk a lot.
I'm using the analytics that come from my note taker and things
Yeah.
like that to help me and adjust along the way, and also gauge some of the feedback and what the clients say too and afterwards. So yeah, it's definitely a skill that we will constantly work on and work to improve.
Yep.
Yeah, I definitely feel like you guys are part camp counselors sometime where it's just sitting down and listening and just, give the advice when it needs to be given. But yeah, it's part of listening there. So, well, I appreciate that. Thanks for the transparency there. So let's just jump right in here. Urban, or actually, John, I'll start with you. I kicked off with Urban the first last time. When you first got a bit back in the day, Riskalyze, now nitrogen, originally, what problem were you trying to solve? And then has that adapted or changed over time? And then Urban, same question to you after John.
No, I think explaining risk better, right? So you can talk about Sharpe ratio, beta, all that kind of stuff, alpha. You can talk about all these different numbers and measurements, but at the end of the day, most clients don't want to hear that, or at least don't understand it. And that's assuming that you as an advisor can explain it. I mean, it's not easy stuff. I was talking about beta with somebody earlier. It's hard. So Risk Alliance provided a way to simplify that conversation. And I just saw it as I can have a conversation and I can say, look, it's a speed limit. And I just talk about zero to 100. Just 0 to 100. Where are you at? Here's your portfolio, but here's where you should be. Or here's where you are. Why isn't your portfolio where it should be? And so using it a lot with current clients, but also prospects. But I think just and how it's changed. Certainly, all the stuff you guys have added in the last 10 years. I think and bringing on reports, reports builder, bringing on the stats, bringing the um, the analytical tools that you have built in. Now I build portfolios. I have my staff. I hired somebody and he was just commenting about how a lot of the portfolios are 3.5 to 4. And I said, yeah, because GPA wise, because I said, yeah, because I use nitrogen to build the portfolio. I want it to be built out that way. So using those different tools that you guys have put forth, I use it for an analysis. I also use it for risk, security analysis and risk analysis.
Okay, awesome. Urban?
The what brought me to it was the fact that my firm at the time, I was looking for a replacement for I'll use in quotation mark paper version of a risk tolerance questionnaire. It was 10 questions, wasn't something that was very user friendly from a non-professional experience. Wasn't anything, a document I could just simply send a client and hope they answer accurately. And this tool made it much more collaborative to go through, and we could go through the paper one as well and explain it, but it seemed to take a lot longer. So for me, it was some level of efficiency because it wasn't dealing with yet another document. It was a way to explain risk that became much more comfortable as far as having those conversations with clients and helping explain. Like John said, with that 0 to 100, where do you think you fall on that scale? Do your answers say that, or do they echo that, or are they different? And how does that fit within your current portfolio or where you really need to be? So yeah, replacing that paper one, which was inefficient, was huge at the very beginning.
Awesome. Thank you so much. Hey, Tom, thanks for joining us.
Sure.
Tom is our third advisor that's joining us today, and I appreciate it. Tom, just to catch you up here, I know we ran into a little tech issues. Sorry about that, but would you mind just introducing yourself just real quickly, just a little bit about your firm, about 30 seconds, and then would you mind just walking us through why you originally chose? I know you've been around for a while too, Riskalyze, now Nitrogen. Back in the day, what problem you were trying to solve, and has that changed over time?
Sure. It has changed. I started about 10 years ago. Could that be right?
Yeah, it sounds like.
I had broken away from Morgan Stanley. I was vice president there. It was time to break away and you spend some time. For me, it was a couple of years really deciding how I would go independent. I joined an RIA called Mutual Group, Mutual Advisors, that had a bundle, available to me. So I chose Riskalyze. It was enormously helpful. Somewhere along the way, and I was utilizing it really to get a good risk assessment on all the clients that I had moved over, and I can explain in more detail than how I utilized that. And then it disappeared because apparently my RIA had ended their enterprise agreement with Riskalyze, and they were bundling with Orion, and so I had this hidden levers, which me and my assistant worked furiously to try and figure out, and it was nowhere. I mean, this is not just a pitch for nitrogen, but it was just a very inferior product on a lot of levels. It was inferior in terms of having to really start over with a new numerology in terms of the risk assessment. It wasn't capturing data from my website the way that Riskalyze had. So I made the decision. I was like, oh, I don't care if I pay for it. I'm going to start up again, which I did. And now I am in this point of updating all those risk numbers for clients, which isn't bad. It's getting me refreshed. It's reintroducing them to the product in that sense. And went to the summit recently. It was wonderful to see you and Aaron and other people who are involved. And it's kind of starting fresh in some ways with me. But just a little recap. I would take that risk number. I would apply it to a model portfolio. I generally like to work with First Trust. I could, let's say somebody had a risk number of 67. If I found something, a comparable ETF portfolio with a 65, notch it down just a little bit. And then that would be the core, I would say the core portfolio that I would build with ETFs. I generally like to carve out about a quarter of a portfolio, certainly for taxable accounts. In IRAs, it can go more fully into being invested, but I like to keep that available for single stocks. If they had a concentrated position, they were moving all the kinds of things that gave me a little bit more personalization. And then by largely structured products. And I've shifted my focus working with an investment bank called iCapital to source it. And frankly, I've done 5 custom notes with them as well. So I found it just enormously helpful when markets go haywire, like Liberation Day did in April. I never get calls because I think all my clients get a response in the market that's suitable for their risk, and that I am enormously appreciate, because it's really helped me return to getting a proper kind of risk assessment on all my clients.
I appreciate that. That's really good. And we'll kind of corporate speak here, double click on that in a second there, because I want you to go a little bit more on that. I want to move us to our next question here. And thanks, guys, for the answer there. The second question is, we've been talking a lot about the client life cycle this week in Bootcamp. Urban, I'm going to start with you. Tell me a little bit about where nitrogen sits in the client journey. Is it prospecting? Is it onboarding, annual reviews, ongoing conversations? Maybe all of the above. And especially we get a lot of questions from advisors like, how do I onboard people using nitrogen? So if that's part of your process, can you let us know there? And then we'll go on to Tom, and then we'll end with John there. So Urban, start with you.
Yeah, no, I would say that there's still an opportunity for me to use it from the prospecting standpoint, but I will say that it's key from onboarding on. From an onboarding process, I try to explain to clients about risk from the very beginning. The idea that markets are volatile, the market's going to go down during the time that we're working together, probably multiple times. You're going to feel uncomfortable, and we're going to find a place where you're going to feel comfortable enough that you're not worried about picking up the phone when that Liberation Day happens or some equivalent, and you're wanting to change strategies or bail out. And what I do from the very beginning is set the stage for that. And then most of the time I'm going through the questionnaire with the clients, whether it be online in a Zoom meeting or whether it's in person in the office. We're going through that together so that they can answer those questions as best they can with the knowledge that it's not a number that's set in stone and may change over time. When it comes to the annual or recurring meetings, the way I'll use it. And I've really, this was only adopted here in the last several years, was that I really like the portfolio report. I know it's a legacy report on nitrogen, but I really like that one because it gives you that 95% probability and a range of return, as far as what we might expect 95% of the time. And what I've done is if I'm delivering a performance report, I'll specifically prepare a 6 month report to compare it to, hey, here's how the last 6 months went, and where do we fall in that 95% probability? Guess what? Where did we fall? Right in that 95% probability most of the time. And I think that's really helped assure clients, hey, my portfolio is doing exactly what I expect it to do based on the current conditions. And thus it doesn't sound as scary or feel as scary. Doesn't mean I don't get the occasional call, but most of them just say, I knew what you were going to say. I just wanted to hear you say it.
It's that camp counselor again that we were talking about.
Yeah.
Part therapy session for sure. That's really insightful, Urban. Thanks for sharing that. Tom, same question to you. Prospecting, onboarding, specifically onboarding, if it's that is part of your process. I know you talked a little bit about that, and then is it ongoing reviews as well? Just give us kind of a heads up on that.
Ditto what Urban said. that was that was well that was well explained in terms of it. I'm working toward utilizing it more for a prospecting tool, because to me it is the first step. And at Morgan Stanley we would have some kind of questionnaire, same sort of thing that would formalize in some ways what people's risk tolerance was, what your investors' risk tolerance was. So I think most of the prospects are rather fascinated by it to produce a portfolio. And then I haven't gotten to the point of really comparing it with their existing portfolio. So this is part of my entry into nitrogen to really figure out, okay, they've got an account with Wells Fargo. How does this compare with this risk number? And then you've got some credible kind of analysis in terms of why you're taking on too much risk here, or why are you so heavy in Microsoft, or whatever it happens to be in their portfolio that might be throwing some things out of whack. We're always taught to diversify, but concentration is also important in terms of a approach that the investor really believes in. As I say, Bill Gates never sold his stock and diversified, and look what happened. So, but it does give a basis, I think, for really giving them what would be, again, a core portfolio that they can consider. And then by having a certain amount that I can manage on my own, in that sense, of introducing other elements in that portion of their portfolio, makes me not just a robo-advisor, because that's what I did not want. I don't want to just plug people in and say, okay, this is it. I wanted to personalize it in some ways. I do notice that in my risk variance analysis that compliance will send me, and I'm like, well, it's because you haven't figured out really how the component of structured product might work into their portfolio. I love structured products. I've mastered them in a lot of ways. But you still need a core, and that gives the liquidity. I think that's also really essential for clients. I can always trade in and out of the various ETFs. There was a process called autopilot that you had. I don't know if it's still part of okay. Because once you had 3 million with a particular provider, in my case, working largely with First Trust, I was able to just block trade a whole amount. And that could be a very effective way to quickly put somebody into a portfolio that fit that match their styles. And I'm really eager, slowly, but eager to find out what the other nitrogen products offer now, because everything's moving so fast and it tends to give you a headache. And you come back from a summit like I did, and you get 60 emails from the people that now have my email address or scanned my my placard. So I'm trying to make it simple, and this does make it simple. I do like that 6-month horizon a whole lot, because I always explain reading the market is kind of like reading the weather. I can tell you what's going on in the next week or two, and maybe out further than that. But I've always been surprised by Wall Street's feeling of, at the beginning of the year, they need to do this analysis. These are our 10 predictions for the year. Well, why isn't it June 17th that you pick and then do it on that annual basis? It's too hard to really project what's going to happen on the longer course. And at least this gives me a framework that I can work with and then adjust their portfolios if they find that they're a little scared by what's going on in the Middle East right now, or they see this as an opportunity to take on more risk because they think it's a temporary hit to oil prices, and these are throwing things out of whack.
Tom, you hit on something there too, like, and that was kind of like the original. I don't know if you knew that or not, but like creating a framework, and that's one of the reasons like the risk number was created, to create a framework for clients to understand, and exactly what you both were saying, react to risk appropriately, right? So that we're not making those knee-jerk decisions in the short term, and then we're just sabotaging things that, sell low, buy high. We don't want to repeat that cycle there. So Tom, that's right on here. Hey, just for the sake of time, thanks for letting me kind of interrupt there too, and really great points. John, I want to get over to you, and we got a few more questions that we want to get to. But John, kind of same question for you, process, where it's prospecting, onboarding, ongoing meetings. How does that look like for you in your process?
Yeah, so I think for onboarding, it's a matter of talking to new clients and saying, well, give me your statement. Let's take a look. Let's do the analysis on your statement, and then let's do this questionnaire and see if it matches up. I think clients don't right now. I think, and you guys touched on this before about the risk and making sure it's aligned with their portfolios, but I think right now the stock concentration is a huge issue, and people don't realize how concentrated their portfolios might be. I mean, you own an S&P 500 fund, so that's what the internet tells you to own in your 401k, and that's great, except that you own 7 companies or 10 companies that the majority, not majority, but a big chunk of your money's in there. And I think showing them that and saying, do you realize how risky that is, how market risk that is? I use that when I get the risk number, get an appropriate idea of what they're doing and what they should be changing. And then onboarding them, especially we use eMoney. So it integrates with eMoney. We get their risk number up on their portal. We have that kind of figured out, and then we connect everything and start to build out. So whether it's building a new portfolio or looking at their current portfolio, or adjusting their current portfolio, we can do that way too. And then ongoing, it's a matter of just continually. I did 2 this morning, and I use the reports builder, build that out. Here's the things I want. I built my own template, use a template, and I like going through that. The stuff I want to talk about, it's stuff that I want to talk about in terms of not just gross return. Everyone wants to know, how did I do? And then they look on the TV and they go, well, why did my brother-in-law do this? Or why did the TV say the market's this or whatever? Well, yeah, but you're not the same risk. It changes the conversation, right? From gross return to risk adjusted return. Yeah. How efficient is your portfolio? And that's what I focus on with my ongoing. It's the same thing in prospecting or when you're onboarding. It's like, first of all, do you know how risky you are? But also, do you know that your portfolio is taking more risk and getting less return potentially? Showing that efficiency of return.
John, you mentioned GPA earlier, and a lot of the folks want to know, like, how do I explain GPA, or how do I talk about GPAs? How do you address that with clients when you're going, or do you?
Yeah, no, for sure. Just the way a GPA is. I mean, right? So 4.0, I talk about A minus, B plus, B, and I mean, Jerry, if you're over 3.5, I tell people I'm not going to touch it. It's good. That's good. Over 3, we can talk about some stuff. And then, like I said, I build portfolios with that in mind. So when I am building, I'm looking at the GPA. I want to know, does it match the risk and the efficiency of risk that I want? I want a B plus or above, right? I want an A minus. So I talk like that. And then I have portfolios that hit 4.3, 4.2, that kind of thing, and explaining extra credit. It's a little bit more like I think that kind of, in my opinion, takes a little bit away from it actually, because you're like 4.0 is 4.0. I'm like, well, how can you get better than 4.0? Well, you get some products that can have done better or whatever, but I talk about it like that. A plus, A minus, B plus, and people get that. I mean, everybody for the most part understands the GPA part of it. But that's the part I focus on. I mean, certainly talk about the 95% probability and the swings. I talk about the overall asset allocation. We talk about the risk number, but I try to get right into that GPA because that's where, look, you may not think you're doing well, but you are for the
Mm,
risk you're taking.
mm,
If you want to take more risk, let's talk about that. Let's go down that road a little bit. But at the end of the day, you're doing well for the risk you're taking. And people don't think that they listen to the news or they talk to their brother-in-law and they got this stock and well, why am I'm not in that stock. Well, you're a 30 risk, like
mm, mm.
we got to play the game the way we should play the game, right? And then again, it just starts that conversation in a different path. Like you're not doing bad, you're just more conservative. And the market, especially with the concentration that we've seen over the last couple of years, you're you you're not as concentrated as the market. That's a good thing, not necessarily a bad thing. Certainly, like Tom mentioned about, I think it was about Bill Gates and his stock, right? Yeah, of course, you've done great, good, but it might be a time now to have that conversation about let's lower our exposure to some of those stock.
Yeah. Interesting. Interesting. Appreciate that. Just a reminder for folks, I see questions coming in there in the chat. If you could just help us use the Q&A box there. Not that we won't answer them, but that kind of just helps us track them. That way we can tee it up for our friends here as we're going through the webinar today. Stephanie, I'm doing a lot of talking. I'm going to tap out. Would you mind? We've got another question for our panel here.
Yeah, no, absolutely. Thanks, Chris. Yeah, thanks everybody so far. Loving all the insights, particularly about kind of what phases and stages you use it in your client journey. So to shift a little bit and talk about how it's impacted your clients, specifically, how has using nitrogen changed the way your clients understand risk? And sort of related to that, has it impacted their behaviors, when volatile markets happen and the ups and downs and things like that? So I'll kick it over to Urban to start us off.
Thanks, Stephanie. And Tom alluded to this. John may have mentioned it as well. I don't get as many calls during those periods of volatility, largely because I think it's at the very beginning of the conversation or very beginning of the relationship. And then what clients end up hearing over and over again is a consistent message about that. And I think that lends itself reinforcing it with the probability and their actual results in a similar time period, I think help. But for the most part, I joked about it that, very few people call and occasionally they do. And there's one that stands out to me, I'll share with everybody for today's purposes. And that was the client, not a tremendously sophisticated investor, was very nervous when the market would go down considerably on any given day. And I'd see the phone call coming in, I'd pick up the phone and the comment was, Urban, am I losing money today? And it was partly in jest, partly serious, especially early on. And I would say only if we did something silly like took action today. We made, sold, for instance. And they never did. And over the course of the time working with them, 10 years plus now, and now they call up and they'll jokingly say it out loud because they know what my answer is going to be. But in all seriousness, what I would do, and anyone else who might call in and feel uncomfortable about that, is I'd offer them the opportunity to redo the questionnaire and see if they came out with a different score. And if they did, that might be worthwhile a more in-depth conversation about whether or not changing the risk level of their overall portfolio made sense. Or if it came back the same score, which is more often than not happened, it was an argument to not make any changes at all and simply ignore the short-term noise that was going on.
Excellent. I like that. Yeah, short-term noise. That's nice. I like that. Perfect. Yeah, John, how about you? And then we'll jump over to Tom. Let us know, John, how you see it impacting your clients' understanding of risk.
Definitely. I mean, like I said, it changes the conversation. It's not talking about necessarily gross return. You're talking about a risk-adjusted return. So continually, every annual renewal or annual or whatever, semi-annual, you're talking about the GPA. You're talking about the 95% probability. Where scores are good, it's not. It's about the risk adjusted. And I'll go one other side of the thing. When maybe you have a client that calls, or when you have a client that calls says, I'm losing money or whatever. I had a client this morning that said, I got one question for you. Can you keep making me 20% a year? And I was like, I use that as an opportunity to show the risk and say, look, understand why you got 20% that last year. It's because of some of the concentration. We can continue to do it, but you have to understand that. And I use the risk report for that. If you're comfortable with it, I'm comfortable with it. That's fine. We can do that. It's aggressive, but you got to understand that. So it's not just on the downside, like trying to help clients understand that your portfolio is losing money and what that means or how much and whatever it is should be there, I guess. But it's also on the upside, right? Like, hey, understand why we made a lot of money last year, a high percentage or whatever. So yeah, I think it's just that conversation. They're looking at it from that, hopefully, and I don't get a lot of calls either. Not when things are down. I mean, it's just they understand, and we've gone through this process so much that I can go, hey, I'll send you a report, and I'll send them the report view or the report builder template that I use. Here you go. Look, this page. Go to this page. Go to this page. It does cut through the noise, right? I mean, at the end of the day, people are bombarded with all these different messages and things, and especially like if you watch the news, it's never good. I mean, it's very rarely good, and so people are scared a lot. And I do that too. I go back to like, well, just understand what your asset allocation is, and look at the projected return and what's the GPA. Look at where we're A minus. I mean, we can be more or less risky, but I'm still going to shoot to be a high GPA because um, that's where the efficiency is, right?
Nice. Yeah. I like that. Yeah. It sounds like you're kind of constantly reinstilling their confidence,
Yep.
um, and reassuring them like, hey, this is a part of the plan. This is normal. And we always love to hear from advisors when they're like, yeah, I get a lot fewer phone calls these days. So that's always helpful. Tom, how about you? What's the kind of impact you've seen with your clients, how they respond, how they understand risk, any of that?
Well, again, I'm reintroducing them after, I mean, some hadn't really completed the questionnaire for 8 or 9 years. And so I always start with explaining what those numbers, sort of visualizing what those numbers mean. So I would always say, if you get a 1, it's money under the mattress. If you have a 99, it's like meme stocks and pot stocks and Bitcoin. And so they immediately get that kind of understanding if they come in at a 75 or 80 that they're, more focused on growth, willing to be a little aggressive, where they get a 40. And, that's where I might introduce more components of just straight bonds outside of, because ETF, as you know, with ETFs, there could be changes in interest rate that affect their value. So I like bonds and structured products to sort of anchor that sense of their portfolio. I've not moved on to the GPAs and the other things. This is all like I said, kind of getting back into it again. But I think the clients will be really pleased to see that it's not just taking a number and coming up with a portfolio, but that it's an ongoing examination of where the real sweet spot is, and how to improve upon that in the portfolio.
I like it. Love it. That sounds great. Awesome. Chris, let's see. You were gonna, okay, for me to take the next
I was going to
question.
pass it over to you. Yeah.
Perfect. Yeah, no, I love it. We like to ping pong, so bring in like different voices and all of that. So always love it. So yeah, next up, the next question, um, Tom or John, sort of to your point on reports, which nitrogen reports would y'all say are most central to your client conversations? Do you present them in meetings, or is it like a deliverable after? John, I'll start with you since you mentioned reports. Are there any sort of key reports that you really like to use?
I have to think about, I built the template probably a couple of years ago already, and I've used the same template ever since. It's just, I mean, it's a lot of the stat stuff, right? So it's the performance against the model benchmark, it's the GPA and asset allocation. I always like to point out, like, look at where your stocks are, and again, concentration, right? So look how much more is in tech now all of a sudden because of whatever, if that's the case. Um, and then I look at geographic location. I think that's interesting. I think people understand, well, again, benchmarks, and this is something that I always talk about, like your benchmarks, if you're benchmarking the US at 95%, that seems high to me. My portfolios are never at 95% US. It's lower, right? So just talking about what that means and why that might be different from a benchmark. I'll put in the obviously the scenarios, stress tests, that kind of thing, so you can see what happens in different times. Um, and then sometimes, depending on the client, I'll throw in a couple extra things. If we're using the retirement map, I used to use that a little bit more. Now I have e-money, so it's a little bit broad, a little bit more detailed, so I'll use that. But I have that in there as well. Let's see, kind of like that. So, and as far as deliverable, yes. Usually, I have a lot of in-person meetings. I do a little bit of Zoom, but it's mostly in person. I print it out, I go through it hand by hand, and I give it to them. Here, take this, look through it, ask me if you have questions. I don't know how many people actually look through it, but I have to tell people, look, I can sit here and I can tell you you're doing okay, but here's the data to back it up. Take it home. If you have questions, call me. So sometimes we don't even open it. We just say, look, remember I got this report. Take a look at it.
Cool. Okay, perfect. So it sounds like you review it in your meeting and then
Yep.
also provide it to them so they can review it a little bit deeper
Yep.
afterwards. That's awesome. Yeah, it sounds like you're using probably our portfolio stats overview report. So it gets a
Yeah, I
little
think
bit
I
more
tailored it a
informative.
little bit, but that's where it started. Yeah, for sure.
Yeah, excellent. Yeah, perfect. Thanks, Chris, to see you pulling that up. Yeah, reports, that stats overview, it sounds like what John is using. So definitely for anybody kind of tuning in and following along, go in there and explore those reports and find those elements and pieces that resonate the most with your clients. Tom, how about you? Do you use any of the reports with clients like during your meetings or afterwards as deliverables? Or since you're kind of getting back into the game, are you revisiting those and reacquainting yourself with them?
Oh yeah, no, it's definitely revisiting. I mean, I've got to go kind of step by step. Uh, One tool that is simple but is so valuable are just the check-ins
Mm.
because you want to maintain a client contact, but you don't want to bother them. You don't want to catch them at the wrong time. They might be in the midst. I've got a lot of people. I'm in Los Angeles, so I've got a lot of people in the entertainment business, and they're either like too slammed with work or they're searching for their next job, and then that's when they love a call from me. But the check-ins are just a wonderful way to get a handle on how they're feeling and whether it warrants me kind of going into a deeper dive for them. So, like I said, it's a very simple way to just keep up with your clients. I mean, I've got one TV producer, showrunner who's got a couple $1 million with me, and I only hear from her when she needs new checks. you know, and I'll keep her apprised on all these things that are going on. She gets
Yeah.
the kind of notices if I buy something or make changes in the portfolio. She's aware, but largely my job is just making sure that she's got enough cash available in her taxable accounts, whether it's time to take payroll from her loan out company. I have more of a relationship with the business manager than with the individual. I don't know if that answered the question, but I
Yeah, no, that's
really
absolutely.
have not done a deeper dive into all the tools that are available. Yeah,
Okay, perfect, perfect, excellent.
feel
Yeah, no,
like
I
I'm
love that.
a
And
newbie.
that's yeah, no, fantastic. And the check-ins being, it sounds like one of those key tools for you to nurture those relationships. Just like John sort of delivers the reports to help give clients information in between meetings and things like that. Yeah, that's awesome. Love it. Urban, how about you? What's your use of reports look like? How do they kind of contribute to your client conversations?
back to Chris's comments for a moment there, and being that camp counselor, that's where most of my meetings reside when it talks about that. I use Orion Planning for the planning purposes, and sometimes I'll just, we can see real-time performance there, and then I can run a quick report, or run a quick scenario for the 6 months, bring up the legacy report, which there's an opportunity for me to go ahead and adopt some of the newer report functions for sure. But that probability paired with the 6 months, if I'm delivering any sort of report, whether it be physically or visually on screen in a Zoom, those two are key to the conversations to kind of pull us back into if this is the allocation that is right for you, this is the mix across the accounts. We're doing exactly what we think, we're expecting things to happen 95% of the time. And if they are, that's usually the end of that bit of the conversation. And we're back to other, other things, other topics that we're covering. But I'm glad that Tom mentioned the check-ins, because that was something that I kind of wish I had adopted earlier. I really would have. And I'm glad that I'm utilizing them now, but something that, yeah, if I would have changed something from the beginning, or would have adopted earlier on, it definitely would have been those.
Excellent. Nice. Love to hear it. Yeah. And it looks like our team as well, for those joining us, dropped more information on check-ins in the chat. So we'll try and drop links and show some visuals on the screen and everything. So perfect. Chris, I know we're moving along. Did we want to take any audience questions or
Yeah.
throw any new questions to the group here?
Do you want to, yeah, if you still have questions, let's do that. We're going to wrap up, fellas, if we can. And Stephanie, thanks so much for helping facilitate here as well. A lot of folks we've noticed, especially when we do things like study groups where you have a cohort of advisors, one of the most curious things is what's your tech stack? Maybe what can I learn of what you're using or how you're using it? So again, we're kind of running. I can't believe how fast the hour is going by. So if we could do maybe like a minute, 2 minute answer here, where it goes. Tom, can you let us know a little bit about your tech stack and just how you're using it? I'm thinking like CRM, custodian, etc. Maybe there's some technical if you're using Zoom, what that looks like, and then Urban, I'll bounce to you, and we'll finish with John.
Well, the CRM, and again, this came as a bundle when I joined this RIA, was Redtail. And Redtail is great if you've got a firm of 6 people, 10 people, 20 people, where you're managing workflows, all that kind of thing. As a solopreneur, as a solo shop, I find it very cumbersome. I tend to just utilize my Outlook. But then to move that over to FMG, which is my website designer and maintenance, they upload from Redtail. So it's synced like that. And if I just move a whole Excel spreadsheet, then I get a problem with duplicate accounts and all that kind of stuff. So I found the what is missing right now, and I'm bringing on a new partner in a couple of years. One of my colleagues from Credit Suisse, when his kind of optimum exit from his firm in the second quarter of 2028. So I'm getting using the existing technology that I have and trying to say, oh, now it could be really helpful in that regard, because we're going to be across country and we can kind of manage things virtually better with the CRM. But, essentially, what I like about Outlook is I get an email, I drop it into contacts, I've got all their kind of information there if I want to transition it to Redtail, or I can just manually load it into FMG Suites, because I should have a lot more people following on that platform. I love FMG. I mean, they've just done wonderful jobs, and they can kind of customize your site. I got a kind of higher tier membership there to be able to do things like sending out custom emails. When I do a custom note, then I can sort of broadcast that to my clients and prospective clients.
You're in the communication hub there, LA. So yeah, for sure.
Yeah, I mean, I like keeping it simple. Even I've been jotting some notes because I'm just very old school. I don't need the AI sort of note taking and all of this. Not to say that I'm not talking to Aaron about Contio and whether I'll add some of these things, but I'm very careful of what I add on to my business because sometimes they can present just a lot of challenges. And if I've got a system that works fine, I like to keep it simple.
Good to keep it thoughtful.
Yeah.
Absolutely, for sure.
Yeah.
Urban tech stack here. If you just give folks what's working for you, what you like, what you're using.
Yeah, recent change for me was moving from Salesforce to Redtail for my CRM, and that was a change of firms for me at the end of the year. And I've enjoyed using Redtail thus far. Orion is behind the scenes there, and I mentioned Orion Planning earlier. And then, of course, the integrations that go along with that. And then I had custody at Schwab and Fidelity, both, and that's pretty much the extent of the major pieces. Obviously, there are some ancillary ones that I use. I do use an AI note taker, and I've found it to be a tremendous efficiency for me, with note taking, with the follow-up email, with tasks, and getting them sent over to the CRM. So yeah, those things. I've been working in a very similar environment for many years, and like the efficiencies that it affords.
Awesome. Appreciate you sharing that, John.
Yeah, I use Wealthbox for my CRM. I mentioned eMoney earlier, so I use that as a financial planning, and have a couple different custodians that I use, and I use InvestNet, and so Nitrogen, obviously integrates with Wealthbox, eMoney, SCI, InvestNet. Those are all companies that I use, and then obviously, I use Jump as my note taker. Been doing that for about a year, and the same as Urban. I mean, it's a efficiency part of it. It puts stuff into eMoney for you, tasks as your drafts and email. It's great. Yeah, I get my risk number right in the eMoney screen. So like it integrates right in. I haven't entered in a client manually in Nitrogen for a long time because it just syncs right over. So everything in eMoney, boom, syncs right over to Nitrogen. So I can get those reports really easily. It probably makes it a lot easier, obviously, if I'm doing it for every meeting, but it just kind of brings it over and you can just print it out. So um, but yeah, otherwise I use FMG Suite for client interaction and stuff, and obviously digital tools for um, forms and all that kind of stuff. DocuSign.
Perfect. Awesome. Always love to get a sneak peek and see what's working for you and what you're like. We'll see how it goes. So that's awesome. I appreciate that. Hey, we want to make sure we're got just a few minutes left here in the hour for some Q&A. Stephanie, if I could popcorn that over to you to kick us off here.
Absolutely. So we'll take a bit of audience questions. This first one, Chris, I'll key it over to you. This was an audience question in our Q&A around householding clients. Is it possible to mix two profiles to generate a combined report? I know we hear from a lot of advisors that they like to create those households. So is it possible to do that?
No, I'm kidding. No, it absolutely is. Yeah. No, we can do that. And guys, I know that you probably run across this. So if you have any pro tips for us, but yeah, you can absolutely do that. Especially one of the things that we talk about, John, we were talking about integrations and how we can use integrations. But when we're setting up a client, we can go ahead, if we're adding a new client, do it that way. And then we can manually add multiple accounts and just designate whose account is what. We could also send out multiple risk questionnaires. So maybe we want to get one for one spouse, one for the other spouse. So Stephanie, if we, for instance, just click choose a client at random there. So yeah, Ben and Amanda Smith right there. So for instance, if we click on risk number there, now we have a answer there for Ben, but if I wanted to send one out to Amanda as well, I just click on add questionnaire over there on the right-hand side, and we could go ahead and send out multiples. We can customize it there for Amanda, put in an optional option there, either put in a dollar amount or not. A lot of advisors like to leave that blank because that's going to be a question inside of the questionnaire. And then just see like, I would love to see what Amanda puts in there. Is that match up with what we have, or is there a little bit more there that maybe we can talk about in our meeting? So that's how you would do that. If it's an integration, if they're already coming through, so let's just say that, for instance, we've got Ben connected through an integration. We've got his accounts flowing in there. We would just click on the client actions button there, and then we would go ahead and choose integrations, and then we could go ahead and search for Amanda, and that would sync Amanda's account in as well. So we just choose our custodian. For instance, if Amanda was coming through here, and then we could have both of their accounts, it will label their accounts, et cetera, inside of that current portfolio, and that's how we could household accounts. So that's how we do that using multiple folks inside of a profile inside of Nitrogen. Now we've had advisors that say, "Hey, I have one profile for one spouse, another profile for another spouse, and then a third profile that has them combined." I say you do you. Any opinion on that, fellas, when handling households?
For me, simplicity is key. I'd have one for the combined household.
Fair enough.
I do multiple questionnaires. I mean, I think that's great. Especially, and then you do that, tell them, don't do it together. Do it, each one do your own. Because I mean, that I want to see what's different about it. And I put it all in one. Yeah, three would be a lot, I think, for a household.
Yeah. Yeah. Again, dealer's choice there. Awesome.
And Chris, I'll add in one pro tip as well,
Yeah.
too, real quick, when it comes to combining profiles. If there is a situation where another profile accidentally gets created, or maybe they visit your website and take the questionnaire and then you end up with like duplicates or anything like that, to create households from your client list, you can also merge profiles. So from your homepage, you can click on the little circle that pops up next to any client profile here. You could click on there's that merge option down at the bottom. So you just merge, and then that can also household profiles together, just in case duplicates get created. So an extra little bonus there.
That's
Amazing.
awesome. I totally forgot about that. Thanks, Stephanie.
I know, right? That's okay. That's why we're all here. Yes, we all have different workflows. Yeah, we all support each other. Awesome. Another audience question for Eric, or from Eric for Tom. Let's get this right. How are you assigning risk scores to the custom structured notes that you mentioned, Tom? Do you customize those in Nitrogen? What does that workflow look like for you?
No, I really don't. I mean, I always explain they're defined outcome. They do precisely what they say they're going to do. And sort of the pitch is that you can get equity like returns with a bond like volatility. So, I'd consider them very, very low risk number in general, because unless you have a breach, unless it breaks through, and since they're usually index based, I've never had, since starting my own firm, a breach where one index component drops by more than 30%, or they're designed in ways that might have a real long tenor. So if they miss a payment, it just goes on to the next thing and might get called away in the third year or the second year instead of the first. But generally, I perceive them much more like bonds,
Okay.
and like a bond that is heading toward a breach is just like a bond that's potentially going to default. So, then you have a decision of whether you want to trade out or want to ride it out. But your real only risk is the credit risk. If I'm buying from Goldman Sachs and Morgan Stanley and places like that, BNP, BMO, Wells Fargo, Bank of America, I'm not particularly worried. However, I did work at the one firm that actually became a problem. That was between my first and second year of my MBA. I was at Lehman Brothers as an associate, summer associate. And when they went bankrupt, it unwound those much in the way that a bond default, a bankruptcy would affect bond values. So as long as I'm buying good quality and I'm very careful in choosing them, and iCapital is enormously helpful in narrowing those sorts of decisions. Or, the last custom note I did, instead of one of the indices, I added Amazon, because I didn't see Amazon as a stock. I saw it as a good entry point in terms of the stock, that I didn't really see it collapsing by 30-35%. And just that one addition in place of an index where I have, you know, the Russell 2000 and the XLV for healthcare, and then matching it with Amazon, I get a 21.5% return and an annual return in a growth note, so long as it meets those parameters. And by having a 5-year tenor, you're not really worried about it. If it happens to miss, it'll carry on to the next year. And some have a memory feature and all those kinds of bells and
Yeah,
whistles.
yeah. So it sounds like for clients, maybe you're illustrating those risk levels kind of similar to bonds. It sounds like
Exactly.
kind of those low scale. Okay.
Exactly.
Nice. Amazing. Amazing. Perfect. Let's see. We've still got a couple minutes left. Chris, I think I'll send this next one over to you from Christopher to Chris. Here you go. Do you know if the risk number from nitrogen is computed similar to the risk number in Orion planning? I know a lot of platforms come up with their own kind of calculations. So what would we say to that one?
Yeah, for sure. And we answered this in the chat too. So if you want to look in there too, basically, we're not schooled on the ways of Orion and their methodology, but we can say with our risk numbers, basically return volatility and correlation, our data set goes back to 2004. So there's lots of history there. If you want to, Ian, our teammate in the background, put the article in there, but that's basically what we're looking at when it comes. It's a proprietary scaled index. So there is some calculations going on there. But I think, Tom, you said it, 0 to 100, or John, I think you said it too, like 0 cash under the mattress, 100. How does crypto look for you right now? So that's kind of how we're using that scale there to do that. But yeah, that's how that would look. And Stephanie, if I could jump in here, because I know we've got just a couple of minutes left till the
Yeah.
top of the hour, and just wanted to wrap up with this one question from John. Anyone doing tax planning? And if so, what are you using? How do you integrate that into investment planning? So this kind of came in when we were talking about integrations and whatnot. So again, the question is, anyone doing tax planning? And if so, what do you use? How do you integrate that into investment planning? So I'll turn it over to the group.
I'll mention I've been using Holistiplan for a number of years, and really, really like the observations, the tax return report that's generated from there. And that really helps inform at least things that we can consider from a planning perspective. And that starts the conversation. So, right around this time, clients are either asking for my help with gathering documents occasionally, or they're calling from their from their tax preparer's office sometimes. But either way, it gives me an opportunity to remind them, hey, when that tax return is done, let's make sure we get that uploaded so I can run the report. And somewhere in that, that middle part of the year, so where, if we've got, sometime during the, late spring, early summer, we're meeting, then on the agenda is tax planning conversation. So whether that's Roth conversions or any other strategies we might employ, that's typically where it will come up.
Awesome. John or Tom, any like the last 2 minutes here, anything from your end around that conversation?
I'll just say, I mean, I don't utilize a particular tool. I know Jarvis, who was speaking at the summit, really focuses on integrating that. I think it's just main thing is get to know every CPA. It should be a conversation that your client and you and the CPA have at some point. Give it a month or so after tax filing, and you might find when their CPAs are back from that needed vacation, it's a good time for a conversation. And but I'm curious to use the other tools. Oh, by the way, for financial planning, I do use the Orion tool. I find that very helpful. And somebody I met at your Salt Lake summit who became an intern and was studying financial planning at BYU, and then he started doing the plans with Orion, and it was very valuable. He put together these great Loom videos, and people could understand exactly what the report meant.
Awesome. Well, very cool. Well, John, I'll anything else to add? Otherwise, we'll wrap up here. Awesome. Well, hey, I want to thank the panel there. We put up a poll here just to let us know, hey, how helpful was this for you? It just helps us as we're planning content in the future. So, Urban, John, Tom, thank you so much for taking some time out. Stephanie, thanks for co-piloting here with me. And thanks to our advisors who joined our conversation today. Hopefully you learned something. Listen, I learned something today, and it's been 10 years, so we're learning new stuff every day. So a huge thank you to our panel. Tomorrow, for our boot camp, we're going to have basically a coaching corner. So we're going to have it like meeting style where you can jump in, you can come off of mute, you can have your camera on, you can ask us questions. So like at our summit where we have coaching corners where you can talk to the coaches, we'll be in there. So be sure to join us tomorrow. But again, everybody, thanks so much. And we'll see you guys all tomorrow. John, Tom, Urban, thanks. We'll talk to you guys
Thank
later.
Thank you.
Yep.
Thanks for having us.
Appreciate your
Sure.
time. Bye-bye.